And we start with the markets, which are lower today, although the Nasdaq just went positive. The U.S. presidential election is tomorrow, of course, and the Fed decision is on Thursday. The Fed is expected to cut rates for the second straight meeting, only a quarter point this time. What does it mean for investors? Let's ask Rich Bernstein. He is CEO and Chief Investment Officer at Richard Bernstein Advisors, and our own Michael Santoli is here as well in the house. Mike, it's great to have you. Rich, let me just start with you. Your protege, Michael Kantrowitz, the other day said he was not a big fan of small caps here. We were talking about rates and so forth, but I know that you are, and I wonder if you would still be as vehement about how attractive they are now as you were before.
Yeah, Kelly, look, I think that markets tend to broaden as profit cycles accelerate, and the profit cycle is accelerating. You know, I always try to point out to people that the cycle, by definition, is determined by cyclicals. And so if you believe the profit cycle is accelerating, which it is doing, and if you think that's going to continue for several more quarters, then it pays to have cyclicality in the portfolio. And smaller caps are more cyclical than larger caps. So I think everybody knows that. And so that's why we favor still small and mid caps.
Mike Santoli, why do you think Warren Buffett is selling so much stock and raising so much cash and ending buybacks? What's going on there? What's he telling us?
I think it's definitely a series of things going on, both specific to Berkshire Hathaway and then in general in terms of the market, general atmosphere. Clearly, Buffett and his colleagues don't see great amounts of value in large cap equities, anything that would move the needle to where you'd want to make a big bet. Clearly, he always says he would love to buy an entire company or more than one company if the price were right and if there was a willing seller and if it fit. None of that's happening. And therefore, I think he wants to reduce some of the outsized bets within the public equity portfolio. That's been seemingly a priority all year, meaning we came into 2024, Apple was almost half the portfolio. It had gone up so much. It's also very expensive. It's 30 times earnings versus, 15-ish probably when he first bought it. So I think a combination of, selling down some of the outsized positions and maybe more expensive ones, and then the cash, he's happy to hold it and collect T-bill rates while he waits. Also positioning the company for what comes next.
So what I hear you not saying,
to maximize the flexibility.
What I hear you not saying is that he is not making a broad call on the markets here, that it has much more to do with the internal composition of his portfolio.
That's the way it would look to me. Obviously, if he felt as if the U.S. economy were about to accelerate and all of a sudden it was going to make things look cheap based on today's prices, he would think otherwise. But I don't think it's really a market timing call in any acute way.
Rich, is there anything you'd add to that? We talked about this last hour, but the S&P at 24 times trailing earnings versus 16 a couple of years ago?
Right. Well, I think, look, I don't know the motivation for selling Apple per se out of his portfolio, or out of Berkshire's portfolio, to be more accurate. I think that, we're in an environment where people are embracing risk. And historically, that's not been the best time for a value investor like Warren Buffett, right? You tend to shy away from those kind of markets. And for instance, if you look at private client equity beta, which Merrill Lynch puts out, the beginning of the bull market, it was 0.75, much lower risk than the market overall. Today, it is a absolutely whopping 1.45. So in that environment, you should be expecting people like Warren Buffett, who have big gains, to be selling some of those big gains and diversifying the portfolio. I really think that's what he's doing. And I think if you're not a momentum investor, I think that's a very prudent thing to do.